SoFi is set to release their Q2 earnings report next week, but July has been a very interesting month. After dropping to its 52-week low, SoFi rallied back over 25% last week, but has now pulled back a little, which provides us with a nice opportunity now with earnings due to be released on Tuesday, July 30th. So in this video, I will be doing an earnings preview, and I'll tell you how we can take advantage of this opportunity. This is a must-watch video if you are serious about SoFi stock. Before we get into it, if you find any value in this video, can I ask you to smash the like button? It literally costs nothing, but it helps the channel out so much. I'm aiming for 400 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I'm not a financial advisor. This is not financial advice, so always do your own due diligence. Now, there's a lot to discuss, so let's get straight into it. First of all, let's go back to what SoFi reported in their last earnings report and the guidance that management put in place for the year. So let's look at Q2 2024 non-GAAP guidance. Management expected to deliver between $555 and $565 million in adjusted net revenue. So this would be between 14 and 16% year-over-year growth. Adjusted EBITDA of $115 to $125 million, and finally GAAP net income of between $5 and $10. So that's the Q2 guidance. And for full year 2024 guidance, they expect to deliver financial services growth of 75% or more versus 2023 levels, tech platform growth of 20% or more, lending segment is to remain at 92 to 95% of 2023 revenue levels, and GAAP net income of $165 to $175 million, with adjusted EBITDA of between $590 and $600 million. EPS expectation of 8 to 9 cents and $800 million to $1 billion of tangible book value growth. So this guidance assumes expenses under the EBITDA line to remain flat, a 50-50 revenue split between lending and the combined tech platform and financial services segments, as well as adjusted EBITDA margin ramping to 25% by year end. Now, what's interesting here is that they are expecting the lending segments to return less than 2023 levels, while they expect the tech platform to grow at a solid 20% rate, which is strong. 20% is a healthy growth expectation. But they expect financial services growth to be substantially more than 75% revenue growth over 2023 levels, and this is huge. And going back into the actual earnings call transcript, Anthony Noto stated that 2024 will be a transitional year for SoFi. We are taking a conservative and pragmatic approach towards our lending segment revenue, given our concerns about the 2024 macro environment. Therefore, we will manage the lending segment revenues to be 92 to 95% of 2023 lending revenue. This very conservative view of lending reflects our choice to limit lending growth below both the much higher level of demand we have had and expect to continue to see in 2024 and the capacity that we have. So as it says, they are intentionally limiting growth of the lending business in periods of uncertainty while still managing overall growth. And this is largely due to what Anthony Noto had expected for 2024. Now, SoFi CEO Anthony Noto has been very clear about what he expects in 2024, and in a recent interview, he talked about where the company is, the current economy, and what SoFi is expecting from the rest of the year. If you have not seen this interview, then check out the first link in the description below. It's well worth watching. From an economic perspective, it seems almost certain that the Fed will cut rates twice this year, with the first move in September. Economists have held on to expectations for just 2 cuts for the last 4 months, and are more convinced now than ever. Stronger than expected retail sales in June suggest consumer spending remains resilient, and along with the consensus view that the jobless rate won't rise much either. While all 100 economists in the July 17 to 23 Reuters poll said the Fed will keep rates unchanged on July 31st, more than 80%, 82 of 100, forecast the first 25 basis point cut would come in September, pushing the federal funds rate to the 5% range. That was a stronger majority compared to nearly 2/3 who said last month, while 15 expected the first rate reduction to happen in November or December, only 3 said the Fed would wait until next year. Jonathan Pringle, chief US economist at UBS, stated that we expect a 25 basis point reduction in the target range at the September and December meetings, bearing a meaningful upside surprise in the inflation data. So with this in mind, it's extremely unlikely that we will see the bearish outlook that SoFi had projected earlier this year. Now, in terms of what I expect from earnings next week. So new member additions had increased every single quarter since the company first went public, with Q1 bringing in over 8.1 million members. Now, I expect this figure to jump to about 8.7 million for Q2. 8.7 million members would be an increase of 600,000 members. This would be one of SoFi's best ever quarters for new members, but at the same time, this would only be about a 40% year-over-year growth, which would be the worst rate in 4 years, but it would be in line with the trend for such growth. Similar to for new products, I'm expecting SoFi to again break records here. I expect the jump up to approximately 12,700 new product additions, which would be a year-over-year increase of just 35%. Again, this would be in line with the growth trend. Now, for lending products, I expect a very small increase, despite management forecasting a decline, but it should stay at about 1.7 million. While I expect the financial services products to increase significantly, I expect about 40%, and this to go over 11 million for the very first time. But now the most important metrics that SoFi will be judged on Tuesday is going to be revenue and earnings per share. Now, every quarter so far, SoFi has beat analyst expectations on both revenue and EPS. Like we can see here, June 23, EPS beat by 14%, in September by 65%, in December 23%, and of course, in the last earnings call, beat earnings per share by 638%. Not only that, but in the last 2 consecutive quarters, SoFi has turned profitable reports. Before I make my projections, let me know your thoughts in the comments below. How will SoFi's earnings call go? Will they beat on revenue? Will they beat on earnings per share? Or both? Or do you think that SoFi will actually fail to beat expectations this time, like a few people seem to be suggesting recently? Drop a comment below and let me know your thoughts. Now, the current analyst expectation is that SoFi will report revenue of 566 million and EPS of 1 cent. Now, Google's data is a little bit dated here because the estimate has been revised back to 0.00, as we can see here on Yahoo Finance, and I instantly expect that this will be easily beat. Revenue of $566 million would actually be lower than what was reported in the last earnings, so with all other metrics being on the increase, it is unlikely that revenue will fall. Secondly, management have guided for between 555 and 565 million, but SoFi have always exceeded their own expectations, so I don't see any reason why that won't happen again. Regarding the EPS, the expected is what we see here, 0.00, and I expect SoFi will beat this too, and I'm expecting between 1 and 2 cents. Now, this would be lower than last quarter's EPS, and there are other factors to take into account, but this would still be their second best EPS in the company's history. Given that the EPS is at 0.0, any earnings beat will look amazing percentage-wise. So I expect a massive day on Tuesday. Depending on how the earnings go and how far above the projections that they actually achieve, trading volume should be insane for the entire day and probably most of the week. Now, on this channel, we made a killing in the last 2 earnings reports with gains of over 100% in just 1 day on options plays. So it will be interesting to see how this goes. If you want to know how I'll be playing this for earnings, then drop a comment below. Also, if you want to read up on a very good SoFi earnings preview that I seen yesterday, take a look at Seeking Alpha. This is a very good article with good insights into what to expect on Tuesday. If you don't have a subscription to Seeking Alpha, then click on my link in the description to avail of the current special offer and discount. There's a 7-day free trial, so don't miss out on this. There is actually tons of really good analysis and articles about SoFi and other of our favorite stocks. In my opinion, there is a lot to be bullish about in both the short term and the long term for SoFi investors. This is of course just my opinion and not financial advice. There's a lot of talk on social media right now about this stock, but always do your own due diligence. Remember that I'm not a financial advisor, but if you enjoyed this analysis, then please like and subscribe. I hope you make a load of money on this stock. Follow me on Twitter and I'll catch you in the next